Hello everyone. Today we're going over the major news you shouldn't miss for February 25, 2026. Let's start with the top financial headlines. There are two major developments to cover. First, U.S. tariffs could rise to 15%. According to Bloomberg, U.S. Trade Representative Jamieson Greer said that President Trump may soon raise global tariffs to 15% under certain conditions. Greer stated that Trump is expected to sign an order within the next few days that would allow the tariff rate to increase from the current 10% to 15%, while maintaining consistency with existing trade agreements. In an interview with Bloomberg Television, Greer explained that the current rate remains at 10% for now, but an official announcement could be made to raise it when appropriate. This comes after the Supreme Court struck down Trump's earlier reciprocal tariff policy. The new 10% global tariff took effect on Tuesday, but the administration provided very few details in the first 24 hours. When asked whether raising tariffs would violate agreements with the European Union, Greer said he would address how the policy would accommodate different countries. He emphasized repeatedly that the adjustments would not increase the overall tariff burden for countries that have already signed trade deals with the United States. For nations such as the EU and the United Kingdom, which could otherwise face higher tariffs under a universal 15% rate, this reassurance is seen as positive news. Greer said the goal is to preserve policy continuity and honor previously negotiated agreements while still allowing the U.S. to enforce its trade rules. He also addressed tariffs on China, stating that duties on Chinese goods are expected to remain in the range of 35 to 50%, depending on the product category. According to Greer, the administration does not intend to escalate tensions further and plans to stick to existing agreements. Analysis: what this clarification really means. Greer's remarks help clarify how the new tariffs will affect prior trade agreements. There are two key takeaways. First, tariff levels established in earlier agreements will remain unchanged. Second, the new 10% rate, or a potential increase to 15%, will not be applied uniformly to all countries. Instead, rates will be adjusted so that each country's total tariff burden aligns with the levels agreed upon in last year's trade deals. In practical terms, some countries may face tariffs below 10%. Some will fall within the 10 to 15% range. Others may face the full 15% rate. The guiding principle is to maintain the tariff structure already negotiated. Many analysts say this clarification should have been announced earlier, as the lack of details created confusion among U.S. trading partners. Greer's explanation is expected to reassure many governments and businesses. Second, Chinese yuan surges to a 34-month high. According to Reuters, both the onshore and offshore Chinese yuan strengthened sharply against the US dollar, breaking past the 6.87 level, the strongest position in nearly 3 years. In fact, this has become one of the biggest financial headlines globally today. Both exchange rates moved higher simultaneously, while China's official daily midpoint was set at 6.9231, also marking a 34-month high. Analysis: why the surge surprised markets. Many Chinese and Wall Street investment banks had expected the yuan to remain below 6.9 per dollar during the first quarter. Today's move beyond that threshold therefore shocked markets. Although the yuan briefly touched 6.9 earlier this year, investors generally viewed that level as a strong resistance point. What made today's move especially significant is that both the offshore yuan, which is typically more volatile, and the tightly managed onshore yuan crossed that level at the same time. This suggests not only market forces but also a shift in the Chinese government's tolerance for currency appreciation. Two main factors are driving the unexpected strength. First, the US dollar has been weakening globally, which naturally pushes other currencies higher. This is largely a passive effect. Second, China is experiencing a seasonal surge in foreign currency conversions. After the Lunar New Year, export companies typically convert accumulated foreign earnings into yuan, creating strong demand that drives the currency higher. Will China intervene? A rapid rise in the yuan can hurt exports, so many observers are asking whether authorities will step in. The current assessment is that China is unlikely to intervene as long as the appreciation remains gradual. Both markets and policymakers broadly expect the yuan to strengthen this year, so officials appear willing to tolerate the trend for now. Impact on Chinese stock markets. Many investors are also concerned about how a stronger yuan will affect China's A-share market. Overall, the outlook is positive. A stronger currency tends to attract foreign capital, often referred to as smart money, into Chinese stocks via Hong Kong. 3 sectors are expected to benefit most. 1. Aviation and shipping. These industries rely heavily on imported fuel and aircraft leasing costs. A stronger yuan reduces expenses, improving profitability. 2. Paper and resource processing industries. Many raw materials are imported. Currency appreciation lowers input costs, boosting margins. 3. Highly leveraged companies with US dollar debt. Firms that issued large amounts of dollar-denominated bonds, often in real estate or local government financing platforms, benefit because repayment becomes cheaper in yuan terms. Who loses from a stronger yuan? 2 main groups are negatively affected. Export-oriented manufacturers. A stronger currency reduces profit margins when foreign earnings are converted back into yuan. Cross-border e-commerce companies. Revenue earned in foreign currencies translates into fewer yuan, weakening profitability. Outlook for the rest of the year. Looking ahead, most analysts expect Chinese authorities to manage appreciation carefully. The level around 6.75 per dollar is widely seen as a key threshold to watch. Although the yuan is expected to strengthen overall, periods of depreciation, potentially sharp ones, cannot be ruled out. A recent Morgan Stanley report estimates that a reasonable trading range for 2026 could be between 6.8 and 7.05 per dollar, though forecasts will continue to evolve as economic conditions change. The second major story concerns former President Donald Trump's State of the Union-style address delivered to Congress last night. According to Bloomberg, several key themes stood out in the speech. First, tariffs. After the Supreme Court struck down his emergency tariff policy last week, Trump adopted a noticeably softer tone. He called the ruling disappointing but said his administration would develop a new tariff system using different legal authorities. He acknowledged that the new framework could be more complex, but argued that it would ultimately be more durable and sustainable. Trump also stated that Congress would not need to take further action, saying the approach had already been tested and approved over time. He went on to make a bold claim that tariffs paid by foreign countries could eventually replace much of the U.S. income tax system. While that statement drew strong reactions, another point he made may be more significant. By saying Congress would not need to intervene, Trump suggested that the current 10 or 15% tariffs would not simply expire after 150 days. Instead, they could transition into other types of tariffs, such as Section 301 tariffs, without requiring congressional approval. This detail could have major implications for future trade policy. Second, partisan conflict. Trump repeatedly attacked Democrats and illegal immigration, sometimes combining the two topics in a single sentence. At one point, he pointed toward Democratic lawmakers and said, "These people are crazy." Throughout most of the speech, Republicans stood and applauded, while Democrats remained seated with neutral expressions. Some occasionally shouted interruptions. Trump also announced the launch of what he called a war on fraud, led by Vice President J.D. Vance. He accused federal programs and Democratic-led states of widespread corruption and urged Congress to pass voter ID provisions included in what he called the Save America Act. Third, welfare reform. Trump outlined his ideas for restructuring social programs, though he provided few concrete details. He suggested ending large payments to major insurance companies and instead giving funds directly to citizens, allowing them to purchase health insurance themselves. According to Trump, this approach would reduce costs while improving access to healthcare. Fourth, highlighting achievements. Trump spent much of the speech emphasizing what he described as successes during his first year back in office. He cited accomplishments such as tax cuts, government-funded savings accounts for newborns, declining inflation, and a stock market that he said had surpassed the 50,000-point level. He also credited himself with progress in foreign policy and security, including military actions involving Iran and Venezuela, peace agreements in Gaza and along the India-Pakistan border, and the closure of the U.S. Mexico border to reduce illegal immigration and drug trafficking. Fifth, celebrating America's 250th anniversary. The speech heavily emphasized patriotism and national pride, repeatedly referencing the upcoming 250th anniversary of American independence. One of the most emotional moments came when Trump awarded the Medal of Honor to several military figures, including a helicopter pilot involved in operations against Venezuelan leader Nicolas Maduro, a Navy officer, and a veteran pilot from the Korean War. Analysis: a carefully designed political moment. One particular episode during the speech received little media coverage but appeared highly strategic. At one point, Trump asked all lawmakers, both Democrats and Republicans, to stand if they agreed that the government's primary duty is to protect American citizens rather than illegal immigrants. This was essentially a political test. For Republican lawmakers, standing up was straightforward. For Democrats, however, it created a dilemma. If they stood, it could be interpreted as agreeing with Trump's long-standing criticism that Democratic policies have failed to protect American citizens. If they remained seated, it could be framed as opposing the idea that citizens should come first, an equally damaging interpretation. In other words, the question functioned as a classic logical trap. No matter how one responded, the outcome could be politically unfavorable. Similar rhetorical traps appear in everyday life. For example, asking someone, "Do you still beat your spouse?" forces the respondent into a position where any answer carries negative implications. From both a logical and political perspective, the moment appeared carefully planned, and effective in highlighting partisan divisions. Third major story: Bill Gates apologizes over Epstein ties. The third major story comes from an exclusive report by the Wall Street Journal. Billionaire Bill Gates has reportedly apologized to employees of the Gates Foundation over his past relationship with convicted sex offender Jeffrey Epstein. During a recent internal meeting, Gates also acknowledged having 2 extramarital affairs. According to audio recordings reviewed by the newspaper, Gates said that the affairs involved 2 Russian women and were unrelated to Epstein's victims. He emphasized that he did not engage in any illegal activity and did not witness any illegal conduct. Gates also addressed photos showing him with unidentified women whose faces were blurred in documents connected to Epstein. He said the photos were taken at Epstein's request, along with Epstein's assistants, following meetings. He stressed that he never had contact with Epstein's victims or with the women associated with them. Gates admitted that what he has learned in recent years about Epstein's actions has made the situation appear 100 times worse than he originally understood, and he expressed regret over maintaining contact with him. According to Gates, he met with Epstein until 2014, traveled on his private plane, and spent time with him in locations including Germany, France, New York, and Washington, D.C. However, he stated that he never stayed overnight at Epstein's home and never visited Epstein's private island. Analysis, controversy and skepticism remain. There are several key perspectives to consider. First, some observers believe parts of Gates' explanation may not be entirely accurate. One of the Russian women he admitted to having an affair with is reportedly Mila Antonova, a professional bridge player. While there is no clear evidence that Epstein introduced her to Gates, records show that Epstein provided financial support to her. This suggests a close connection between Antonova and Epstein, raising questions about Gates' account. Little is publicly known about the second Russian woman, but some U.S. intelligence sources have speculated that she may have had ties to Russian intelligence, though this has not been officially confirmed. Second, the allegations surrounding Gates became public largely due to Epstein himself. Reports indicate that Epstein attempted to pressure Gates by referencing knowledge of his personal relationships. Emails later uncovered, apparently written by Epstein as notes to himself, provided evidence of these connections. Third, critics argue that Gates is still trying to distance himself from responsibility. While he has acknowledged mistakes, some believe his statements focus on minimizing legal exposure rather than fully addressing ethical concerns. Fourth major story: German Chancellor Merz visits China. The fourth major development concerns German Chancellor Friedrich Merz's visit to China. According to Bloomberg, after his first meeting with Chinese President Xi Jinping, MERS called for patience and expressed optimism that the two countries could overcome differences in trade and geopolitics to build a strategic partnership. After a dinner meeting in Beijing, MERS told reporters that while disagreements exist, there are also many areas where cooperation is possible, but it will require dialogue and time. During the state banquet, she reportedly informed MERS that China had placed new orders for up to 120 Airbus commercial aircraft. A shift in tone from past criticism. Before becoming chancellor last year, MERS had been highly critical of China. During his earlier career in finance and law, including time at BlackRock, he warned German business leaders against excessive investment in China and said the government would not rescue companies in the event of a crisis. Recently, however, his stance has softened. One factor may be the perception that under Trump's leadership, the United States is no longer seen as a fully reliable partner. Analysis: why the visit surprised observers. There are several important points. 1. A rare joint statement. Germany and China issued a formal joint statement following the visit, something rarely seen when Western leaders travel to Beijing. In recent years, leaders such as France's president have visited China without producing joint communiques. The statement suggests that Germany hopes to maintain a relatively advantageous position in its relationship with China. 2. Germany's strategic dilemma. Germany's economic success has long depended on importing cheap energy, previously from Russia, and exporting high-end machinery and automobiles, much of it to China. But as China's manufacturing capabilities have advanced, Germany increasingly finds itself competing with its former customer. In 2025, Germany's trade deficit with China reportedly reached a record €90 billion. Chinese products are also entering the German domestic market in large volumes, intensifying competition. 3. Pressure from German corporations. Major German companies such as Volkswagen and BASF continue to prioritize the Chinese market. Some have even described themselves as local Chinese companies in order to demonstrate commitment to China. This creates a difficult situation for the German government, as major domestic firms may favor closer ties with China even when political leaders seek to reduce dependence. 4. From decoupling to de-risking, and beyond. Western policymakers originally discussed decoupling from China but later shifted to the softer concept of de-risking, a term promoted by European Commission President Ursula von der Leyen to reduce confrontation. During his visit, MERS publicly supported de-risking but reframed it as a two-way process. He suggested that China also needs to reduce risks in its economic relationships, not just Europe. For example, restrictions on exports of rare earth minerals could also be viewed as a form of risk management by China. Some observers interpret this mutual de-risking concept as an attempt to ease tensions and signal goodwill toward Beijing. This has been Anti-Noise Intelligence, tracking the world so you stay ahead of it. Thank you for listening, and make sure to tune in again tomorrow.